We obviously had a very good quarter in the first quarter. We increased our outlook on both revenue. We took revenue guidance up in constant currency. We also took core EPS up in constant currency growth. So we felt good about that. Obviously, foreign exchange is still having an effect on us, but I think directionally, the momentum that we're receiving in the first quarter, I think is reading through for the rest of the year, and I think directionally we feel good about that. We'll see. I mean, I think that with all of the news in the media right now, we've been careful about thinking about our back half. So we've said markets are probably at or maybe slightly below historical levels, but we'll see, and we'll push that out as we get each quarter forward and tell you what we see.
Well, looking back at the full year, some investors were concerned that a recession might hurt Alcon even more than some of your peers. Looking back, you could argue that it looked like maybe you were being somewhat prudent on guidance, given that you've beat expectations and delivered such a strong result today.
Well, Juliana, we may have been. I mean, I think what we're trying to do every year is build a budget we're confident in, give a range that we feel great about, and make sure that we're on top of all of the possible outcomes. So again, the consumer was robust in the first quarter. The markets were solid. Our product flow was better than expected, and pricing really helped us a little bit in that first quarter as we recovered some price. So I think all things were kind of hitting on the same. We're hitting all cylinders right in that first quarter. I think as we go forward and we see the year develop, we'll move that prudent planning out. And again, I think we've made the right assumptions going forward. But we'll see. If we're wrong on this, we'll be on the high end of our guidance. If we're right about it, we'll be certainly right in the range.
Alcon CEO also told me he was hopeful about the company's pipeline, even as it continues to battle a tough economic environment.
One of the things we like about the eye care business is it's underpinned by some really great fundamentals. So the macros for us, aging population, new technologies in optics, diseases that have collateral eye problems with them, the epidemic of myopia, those are all real drivers that keep our markets growing in the kind of 4 to 5% range. So I think volume is going to be there for us. And I think that's one of the magic parts of our business that people sometimes misunderstand. Look, the economy is going to move as it moves, and there's no way for us to know that. But our ability to create new products for those disorders will be the big driver of what happens. So I suspect that there'll be some ups and downs over the next coming years. There have been in the last 3. So as we get through this, the big thing we can control is product flow and our performance with those products in the market. And again, we're real pleased with our first quarter and how we did that.